Welcome to TheoTrade. This is Don Kaufman. Here we are. It's January 30th, 2017. We've got just about 4 minutes to the cash close of the markets. And what we're seeing today are signs of some volatility emerging. I'll start with the S&P futures, which are currently down about 13 points, just off about 0.6%, but seeing some fairly heavy volume inside of today's trade, again, on what was some sell-side activity. More specifically, if you look at some intraday trade, yeah, it does look like Mr. Toad's kind of wild ride, trading all the way down to 22.63. In fact, the overall range of the trading session is really north of a 20-point range, which is not massive over here. Some other signs of volatility emerging, really very specific to the NASDAQ. The NASDAQ actually touching all the way down into the 5,094 region, again, having an extreme range on the trading session. And hey, it didn't take that long, but I can say now the Dow, it's no longer at 20,000. Hey, what a difference, one day makes. We were at 20,000, we're no longer at 20,000. Anyway, with that, let's get into some specifics over here. So as I was showing some signs of volatility emerging, something that really kind of stands out, not so much the VIX that got back into the 11 range. Now, by the way, that's the most unexciting thing that I've talked about in quite some time. You're getting excited about the VIX getting back into the 11 range is albeit sad, but we're actually seeing volatility futures on the move today, although fading. But when I say some signs of volatility are emerging, this is the VVIX, it's the volatility of the volatility index, and it did get lit to the upside today. In the next day or two, this is going to be critically important. You guys know that I do look at the VVIX quite extensively, and on a percentage basis, it's over a 10% move over here. Again, don't shy away from that. Take a look. It's the VVIX, the volatility of the volatility index. Why is it important? Because it's actually displaying the traders are buying volatility. And the point that I want to make is, even though, as the day progressed, the markets rallied back over here, neither here nor there. So the markets rallied back, but there's a little bit more fear than the day started with. Again, the S&Ps are going to end the day, down a handful of points over here. Again, there's a rally going on into the last moments of the close. Nevertheless, the volatility of the volatility index remains relatively bid up still at this point. So again, we'll look and see if there's any follow through to that. Now, on another note over here, the XLF, which is bouncing again, coming into the cash close over here, showing a degree of weakness, being one of the weaker sectors, and something I've been watching all throughout the course of the trading session today happened to be the advanced decline line of the sectors themselves. So you can see most of the sectors well off the bottom over here, specifically though financials, technology weak, and of course the weakest of those sectors being the energy sector, kind of leading to the downside, almost a 2% move. Now, let's get into some specifics here of individual underlyings. First and foremost, Google. Google's actually down 2.5% over here. Based on what? Absolutely nothing. But, the point being, it is not far off of its bottom. In fact, Google is closing, relatively close to the bottom tick of the day. Again, to look at this on a 1 minute chart, I would consider, there could be follow through to the Google sell side activity. So after the earnings announcement, we didn't get much activity until late in the trading day. All right, last Friday, where we ultimately sold off in Google, a similar kind of pattern emerging, if you will, today. We're going to be watching Google very, very carefully in the days to come for more sell side activity, because for the most part, that's the NASDAQ rests pretty much on the shoulders of one Google. In addition to it, you really have to start considering what are the earnings from Apple ultimately going to look like. So the holiday season here, we're going to get some specifics. When are those specifics coming? Oh, very, very soon. That is tomorrow. That's Tuesday after the bell. Now, currently, Apple, it's not sitting like on a ticking time bomb here, right? It's a $120 product with ultimately about a $4.40 expected move. So nothing too drastic in terms of the expected move out there in Apple. However, you have to recognize the situation that we're in right now, and that is we've already had some pretty substantial sell-side activity in the last two trading sessions in Google, and I'll relate Google back to Apple here momentarily. So Google coming off of, again, the 860 level, now trading into the 820 level, again, on a percentage basis, fairly substantial. Any news out of Apple that might not necessarily please the broader crowd out there, any negative order flow to Apple, could really pound Google in the short term. Again, you're seeing elevated volume, a multitude of days over here prior to and then following through the earnings announcement. Neither here nor there, but again, sell-side activity getting fairly extreme inside of Google, and we're one announcement, that is an Apple, away from Google ultimately getting pounded there. Facebook faring decent today, and of course, I've been asked to bring this up numerous times over here. What is this? 3 down days in Tesla? Didn't even know it was possible over there. It has been quite some time, well, all the way since December, since we've seen 3 consecutive, almost consecutive down days inside of Tesla. So I'll get to some specifics relating to the update I did this past weekend, and that was this. I have been a pretty much avid seller of financials, and that is I'm short financials, and there's a trade I talked about this weekend, which was short financials, okay, and ultimately long the retailers. And this is playing out quite nicely inside of today's trade over here. So for a moment, there's the closing bell with the S&Ps down about 13. So for just a moment, I'm actually going to bring up the specifics once again of this trade. I had lots of emails about it, so I do appreciate some of the emails. We're going to be talking about this trade pretty extensively coming into this weekend. This weekend I'm going to be doing a pairs trading class. I'm going to remove this RSI Laguerre from the pair. Okay, if you want to take again a more detailed look at this, what we're looking at doing is short the XLF, long the XRT, and again you can now see a downtick ultimately in this pair, which is again it's a move in the right direction. If you've never seen pair correlation or standard deviation over here, some pretty interesting stuff. Again, I'm going to go into much more detail about this as the week progresses here at TheoTrade. Nevertheless, if you take a look at the XLF, it's down about 0.8%. You start looking at some of the retailers, the Walmarts, the Targets, they're actually up in the day. That is exactly, it's advantageous, of course, is what we're looking for in this particular trade. Now, moving on in the week over here, let's cruise back over to the SPX and get really specific on the SPX. Forget about a chart. Okay, what you think right now doesn't really matter. There's an abundance of news coming out. Okay, an abundance of news coming out throughout the course of this trading week. Everything from the FOMC announcement to you have a 30-year and a 10-year bond auction on Wednesday before the cash open. You have the employment situation on Friday. It just goes on and on. I want to reiterate something that I talked about this weekend. That's look at the implied volatilities over here. You know, based on these implied volatilities, again, the market is sleeping ultimately through what could be some very serious amounts of risk. And I'll point this out and exactly why I'm pointing it out here momentarily. What's very, very unique this week happens to be in respect to the fact that there's an expiration that happened today. This is a Monday expiration. This is a Tuesday expiration. Okay, so it's an end of the month expiration. There's then a Wednesday expiration and a Friday expiration. We have everything but a Thursday expiration this particular week. Again, highly unusual. None of the expirations are displaying extreme risk parameters out there. Now, as I said, the market might be a little bit asleep at the wheel. The reason I say this is look where the SPX is today. It's $13 and ultimately 84 cents is roughly where it's going to close. However, and this is the big however, again, all the news, everything aside, recognize the range that we saw today. And the range alone today is, roughly speaking, close to 20 points. Yet, throughout the course of the rest of the week, they're only pricing in a $23 expected move, meaning we're supposed to stay inside of this 23-point move the rest of the week. And even seeing the volatility today, okay, did that change from this past weekend? And again, what I'm looking back here is just some data from last week, okay? So if you go right here, it goes to the 29th, that's Sunday. This is actually from what? From Friday's closing data. Now, I'll point this out. From Friday's closing data, With 5 days remaining, we were looking at a $23 move. Okay? Did the volatility, it was an 8.5% volatility. Did they move the volatility up? Yes, but nominally so. Now we have like a $23 move. Again, even given some of the volatility that we saw today, the markets, okay, in terms of the SPX, are not pricing in anything crazy going on over here. That's why, okay, we're going to be watching other signs like the VVIX very, very carefully. Are traders actually going in there and are they gobbling up and buying volatility kind of underneath the seams of the market? Because one of the things that really stands out to me today is the fact that the volatility in the SPX itself didn't really make a large move. But the VVIX, that means they're out there and they're buying volatility, and I'll show you guys this. They're actually buying volatility in the VIX product, but they're not buying volatility out in the SPX. And that kind of leaves me in this like catch-22 over here. And again, you can see right into the close, they left volatility bid up. Watch the VVIX very, very carefully in the next day or two to come. I wouldn't expect much out of the FOMC, but hey, Janet Yellen, it's Groundhog's Day, can always throw a little bit of a curveball at us. So last but definitely not least, the bonds relatively quiet today's session. I am the descending vote in the group over here. I'm actually looking for bonds to rally throughout the course of this week. Stay tuned. Much more to come here at TheoTrade. Thanks everybody for joining us. Have a great evening. Bye-bye.